Thank you so much, Natalie, for being here today. Natalie is over MyExpatTaxes, and this is a question that we get so much within our community for digital nomads, either looking to permanently relocate abroad or they're just bouncing around. It's something that we've had to consider in our move abroad as digital nomads as well. So I'm super excited to have Natalie here today to do some myth busting, I think, around taxes and answer some questions. So thank you, Natalie, for being here.
Of course. Thank you for having me. Yeah, so I'm Natalie. I'm from California, which is also where you are from.
Yes.
Although I'm from San Jose, so you are a little bit further away from me, 2 or 3 hours, I think, away. So yeah.
Yeah. Yeah. Yeah. Not far at
Um,
all.
yeah. Right now, I live in Vienna, Austria. I've been here for almost 10 years, and I was just like you. I lived in the US and I figured, hey, I don't really want to live here anymore. Let's see what else the world has to offer. And then I moved to Austria. And once I moved, the first thing that kind of hit me in my year abroad was you still have to file US taxes. You still have to do that. And basically, that has been what has prompted me to create MyExpatTaxes. So, really, the leading software for US expat taxes, or even if you are just a a US person or a US connected person with international assets, how to file what is typically known as this very complex tax filing in an easy, efficient, and affordable way.
That is amazing. I think it's a service that many people are wanting, especially when they're thinking about living and being abroad as a digital nomad. Like I said, whether they're relocating permanently or if they're nomadic like us, it can get really complicated. What are some of the top questions that you tend to get from your clients? And also, too, what is kind of the makeup of your client? Are they typically digital nomads or are they typically expats who have moved abroad for work, or like what is kind of the clientele that you assist?
Yeah, really for us, it's all different spectrums, right? So we definitely have a big group of digital nomads. We also have a group of folks who it's funny because they're not really nomadic, but it's a little bit like it because they work for international agencies. So they work for the
Uh,
UN or the World Health Organization. And so even though they're living more permanently in one country, they're not paying necessarily taxes there. And so their tax situation looks like a digital nomad. We also have what we call kind of temporary moves. So people that are moving for 1 or 2 or 3 or 4 or 5 years for work and then they'll return. And then we have lifers. I guess I'm a lifer, right? The one
yeah.
move abroad and you plan to live the rest of your life abroad. And so those questions, tend to then go into how to handle retirement, purchasing property, etc. I don't think that's too much of a topic for this audience, but of course, when I think about what are the questions we get the most, right? Looking at the digital nomad side of it is one, how to make sure you can actually exclude your income from US taxation. So,
Mm,
as a digital nomad, I think the biggest thing in your tool belt is that if you actually leave the US and you work outside of the US for 330 full days in a consecutive 12-month period, and I'll break it down, right, as we get there,
yeah.
but just a summary, if you actually are abroad for that long and you're working abroad, you can exclude, you know, over 100K of your earned income from US taxation. So even if you're working for a US company, you can really end up with a zero tax bill from the US. And obviously, you're not registered or paying taxes in any country that you're in. So that's probably question number one is how do you actually use the foreign earned income exclusion? Question number two is going to be if you are self employed, right? So you're not an employee, but you're self employed and you're a digital nomad, which is obviously very common. Is how do you prepare for the US self employment tax of 15.3%? Because that is something you do have to plan for. And then number three is as you are obviously on your adventure of, exploring the world and working, how do you also make sure that you can plan for retirement appropriately, right? So that you can continue to enjoy. And that really centers around how can you continue to contribute to your US individual retirement accounts, IRAs, especially in light of using, the foreign earned income exclusion or other situations like that. So I think those really narrow down to probably the top three questions I would say for digital nomads. But you have to tell me, right? You're the digital nomad.
Yeah.
If you have other questions that we cover, just ask them, right? I'm here at your disposal.
Yeah, no, that's so interesting. So I get a lot of questions about this, the you used to call it the foreign exclusion, right?
Foreign earned income exclusion, FEIE,
Okay.
known as Form 2555. IRS
Okay.
likes to just call things like 10 different names to
Of
confuse
course.
further.
So could you explain a little bit more about how that works? Either if you're a digital nomad where you're abroad, but you're moving to different places, or also if you're abroad and you have decided to, for example, get a digital nomad visa, you are now a temporary resident of the country that you've applied for that visa in.
Okay, perfect. So for the foreign earned income exclusion, the basics of that is if, as the name states, if you have foreign earned income, and so we break that down. Earned income is normally salary, self-employment, or active partnership income. So really income for your services. So this doesn't include rental income, interest income, other types of investment income, etc. If you have earned income and you are working abroad for that earned income, so that's the foreign part. So basically you are physically outside the US when you earn that income, then you can possibly exclude over 100K of that from US taxation. So the amounts differ every single year, right? For
Mm,
this current tax year, it was 120K. For next year, it's going to jump up, etc. But that's the basics of it. So if you break that down, it sounds great, right? It's a great tax benefit that you can use. But if you break it down, you have to pass one of two different tests. The first test is the bona fide residence test. So this is not always applicable to digital nomads, but of course, as you said, if you actually apply for a digital nomad visa and you actually become a tax resident and a resident of that country, right? So this is very popular in certain countries, I believe, like Portugal or Japan or
yeah.
but if you actually register yourself as a resident and you're subject to income tax in that country, you may be able to use the bona fide residence test. And this test is generally easier to pass because the requirement is that you are a registered resident for a full tax year. Basically, if you moved abroad in 2023, right? You wouldn't be able to qualify as a bona fide residence because you didn't, unless you moved abroad on January 1st and then you
Yeah.
were a resident until from January 1st to December 31st, you can't qualify as bona fide residence yet because it has to be an uninterrupted entire tax year, January 1st to December 31st.
I see.
However, if you moved abroad in 2023 and you continue to be a registered resident in a different country, you can definitely qualify under the bona fide residence test for tax year 2024. Okay.
Okay.
So that's the first part. If you're actually registered as a resident, you will eventually look to use the bona fide residence test because this test is just a lot more flexible. The
Mm,
requirement is that you're a resident for a full tax year, January 1st to December 31st, and then you can continue to use it. And the main benefit for that, especially for those that are digital nomads, is you can go back to the US as much as you want. You're not
mhm.
limited in your travel, right? And so you can go back for the holidays, you can go back for summer, you can go back and see your family and friends as much as you want. The only thing to keep in mind is, of course, if you work from the US, that income is considered US source income, so you can't exclude it. But any earned income you earn while working physically outside of the US, you could potentially exclude. So
I
that's
see. Okay.
test number one.
Okay.
Any questions before I jump into test number two?
No, no, no. Test number two.
All
Perfect.
right, test number two. So this is the more relevant one, I would say, for the majority of digital nomads, since if they do not end up getting some type of visa or registering as a resident, that's the physical presence test, and that's what I alluded to in the beginning. Is this whole
Hmm.
you are abroad for 330 full days in a consecutive 12-month period.
Mm,
So there's a lot of planning now involved, and that's why it's a little bit trickier. So basically, in an easy situation, you move abroad and you only go back to the US for 1 week out of the entire calendar year, right? So you just go back for a week for Thanksgiving. Then you can use it because you would have been abroad from January 1st to December 31st for at least 330 full days, right? So
I
you could
see.
basically go back for 35, 36 days, depending on how many days are in the year, into the US. Now, what people don't realize is it can get a little bit more strategic. So if you say, actually, I want to go to the US a little bit more for a longer period, so maybe I want to stay there for summer, the 12-month period, it can start or end in the tax year. So it doesn't have to be as strict as the bona fide residence test where you have to go January 1st to December 31st. You could actually use a 12-month period that maybe is October 2023 to October 2024,
I
or
see.
February 2023 to February 2024. So it just has to be 12 months, so full year consecutive, but it can start or end in the tax year. Now, the
Okay.
only mathematical issue there is then, of course, the amount you can exclude is prorated to how many years are actually in the tax year. So I know that probably means nothing. So I give an example.
Yeah.
If you say, I'm going to, for my 2024 taxes, the period that I want to exclude as my 12-month period of being abroad is going to be, say, October 2023 to October 2024. So then you would have to calculate how many days of that 12-month period is actually in the 2024 tax year. And then that percentage is then applied to the foreign earned income exclusion. So you wouldn't be able to take the full exclusion of whatever it may be, but maybe only 90K or 80K, right? It's a lot of math and a little bit of planning, and you definitely need your spreadsheets out. I mean, that's the benefit
Yeah.
of MyExpatTaxes is you don't have to do any of that. You just have to tell us, hey, this is my situation. This is how many days that I was in the US. And we would say, hey, this is the 12-month period that best fits your situation. And then we do all the math for you, right? But of course, what we cannot do is if you've traveled too much and there is no 12-month period, then we can only just tell you, hey, sorry, you don't qualify. So I do want everyone to kind of, that's listening to plan a little bit. If you know that you want to use the foreign earned income exclusion, if you know that you want to also travel a lot back to the US, maybe just, book one of our planning sessions, which you can do already, and just kind of give us an overview of what your travel is. And we can tell you immediately, will you qualify or will you not qualify? And then you can make some decisions about, maybe I don't go back for Christmas, or maybe I just wait
Mm,
three more months before I go back. So
yeah.
that is something that does require some planning up front. And of course, we have planning services as well for that. So that's the foreign earned income exclusion. There's a lot of
Okay.
information.
Yeah, no, this is so helpful. Question about this. So with this could apply to someone who works for a US company who's able to work remotely anywhere in the world, and also too for people who may have their own businesses or maybe like a freelancer, for example. This could still apply to them even though their income is coming directly from the US. They're not earning it necessarily from like a company or like a client abroad.
Exactly. So again, it's really about, as long as it's foreign earned income, which it's misleading because you think, okay, foreign, that means it must be coming from a German employer. No.
Correct. Yeah.
Earned income is sourced based on where you physically
Mm,
are when you earn that income. So it doesn't matter if it's a US company. You can use this on W-2 income. You can use this on 1099 income. It does not matter who's paying you. It does not matter where they are based. It does not matter the currency you're paid in. The defining aspect of what foreign earned income is that you are physically abroad outside the US when you earn that income.
mm,
Of course, if you are a W-2 worker and then you go back for a business trip for 2 weeks, you will have to calculate the amount that you earned in the US, that daily income, and then that
yeah,
cannot be excluded. But anything that was earned physically outside the US can be. And
I see.
as I said, we do this for you, right? So you would go into MyExpatTaxes, you would tell us, this is all my US travel. You would tell us, is this travel for leisure or for business? If it's for business, which job was this for? And then we automatically calculate that daily rate that you technically earned while being in the US. And we make sure, okay, so this income can't be excluded, but this income can be excluded.
Amazing. Oh my gosh. So you just make it so easy because yeah, I think especially for like myself, we're constantly traveling, we're in and out, so it's a little hard to figure out, okay, where were we for certain dates and what's applicable, what's not applicable. So that's super helpful that you offer that. I also have a question about is it easier, like do you find that one profile is easier than the other when it comes to taxes? Like is being self-employed easier or having your own business easier versus having, being a W-2 employee for an American company?
And so being a salaried employee is just generally easier, whether it's W-2, so a US company, or for a foreign employer, that doesn't matter. But salaried is easier because there's no other additional taxes to consider for the
I
most part.
see.
If you're self-employed, that is more difficult in the sense of now you have to file Schedule C and you have to figure
Hmm.
out what's your gross revenue, right? Your gross income, what are your applicable expenses, and then you figure out what's your net profit. And then the trickier part is now the self-employment tax, right?
Hmm.
Which is about 15.3% of your net profit. And that's a social security tax that the US imposes. Now, if you are a registered resident of a country with a totalization treaty with the US, so for example, with Portugal, if
Hmm.
you're self-employed and you're in Portugal and you have a digital nomad visa and you're registered there, you are not applicable for the US self-employment tax. So we can actually use a totalization treaty and save you that 15.3%. However, if you say you are now a digital nomad in New Zealand does not have this totalization treaty. You should expect to pay 15.3% of your net profit as Social Security tax to the US. It's not
Okay.
loss tax, it's not like income tax. So, income tax, you pay it, there's not really additional benefits. Social Security tax is different. You actually end up adding credits to your Social Security benefits account back in the US to help you get Social Security benefits later when you retire. So, it's not bad to pay social security tax and self-employment tax. It's annoying, of course, in that year because it's additional income that you have, you have
Yeah.
to pay something, but it is not loss. So that is actually a strategy. If you're a digital nomad and you are concerned about your retirement because maybe you don't have a proper pension set up and it's really difficult to have one as a digital nomad, you could actually continue to just pay self-employment tax. And then that you are contributing to your social security benefits account so that one day you can draw from US social security benefits, assuming that, obviously exist at that point in time, right? Because that's always
Yes.
the question. So self-employment is obviously more difficult. Now we get into the company. If you are a single member US LLC, you're basically treated as a normal freelancer, right? Because you just file Schedule C, you do self-employment tax again. So self-employed, freelancer, single member US LLC, all the same bucket.
Okay.
If you have an S corp, this gets a little bit trickier just because you cannot generally exclude S corp income on foreign earned income exclusion. And so you might,
Okay.
while you save yourself on the self-employment tax part, you might hurt yourself in the case of not being able to use this bigger foreign earned income exclusion for income tax. So something definitely to consider. I think I see that
Mm,
happen a lot, just because many people in the US will try to promote this S corp as a way to save on self-employment tax. However,
yeah.
you then lose the ability to use foreign earned income exclusion. And then the last part I would think about having a business is if you actually create a limited liability company outside of the US, right? So if you
Mm,
go and you
okay.
incorporate in Estonia, or
Hmm.
I know Estonia is a popular one, but basically, or the UK or anything, you incorporate your own company abroad. This will definitely make your US taxes a lot more complicated because then you're on the hook to file this foreign corporate form, which is 5471. It's going to cost you a lot more money to do your US tax filing just because it is a lot more complex. We offer this and we offer it for pretty much as affordable as possible. So we charge 299 euros for this form. Most other firms will start charging you anywhere from 500, 1,000, $2,000 just for the form. So it is
Wow.
it's a complex form, and I just, if you're in this, if you're thinking about different structures, those are things to warn you about, right? Is if you're self-employed or a US single member LLC, generally very easy for your US individual taxes. be aware of self-employment tax, but you can use the foreign earned income exclusion. If you're an S corp, you don't have self-employment tax, but you might not be able to use the foreign earned income exclusion. So you might be liable for income tax. If you decide to incorporate outside the US, you will have to file a very complex tax return, which we try to make as easy as possible, but I won't hide the fact that it is more complex. You cannot use the foreign earned income exclusion on any net profit, but of course, if you pay yourself wages, you can do so. And you don't necessarily have self-employment tax, but then you have a potential guilty taxation. So
Mm,
the more complex you create that business structure, generally the more complex your US taxes will be. I hope I
yeah.
answered that in a way that was
Yeah.
somewhat digestible.
No, thank you so much. This is seriously so helpful. The way you're breaking this down, I think it's going to ease a lot of people's fears around taxation. So, I also have a question about, for example, for digital nomads who decide, they want to make, let's say, Portugal, right, their home base. They're currently living abroad, but they continue to travel, but Portugal is still their home base. They've got a visa. What is the I guess a lot of people get confused about what does it look like for double taxation. So I think you also kind of alluded to the fact that, you could potentially use that foreign earned income exclusion for a place like Portugal that has a treaty with the US. Is there an instance where someone would be paying for both the country that they reside in and also paying taxes to the US?
So generally not. So just one for the foreign earned income exclusion, as long as you have foreign earned income, you can generally use it in any country. So it's not so much based on a treaty. That would be more for self-employment tax. But let's just focus on the foreign earned income exclusion and income tax. So if you cannot use the foreign earned income exclusion, say because you don't pass the bona fide residence test or you don't pass the physical presence test. So say you move to Portugal in the middle of the year.
Mm-hmm.
So if you moved in the middle of the year, you probably cannot use the foreign earned income exclusion, but you're also on the hook to pay Portuguese tax. What do? You use the foreign tax credit. That's the other one. So you can always use the foreign tax credit, no longer how often you are in the US or how long you've been abroad. If you pay income tax to a foreign country, the US will generally allow you to use that income tax as a credit on your US tax return. So if your US tax bill was 10,000 US dollars and you paid the equivalent of, say, 15,000 US dollars in Portugal, you could use that and eliminate your US tax bill to zero.
I
If you
see.
ended if you end up only paying $5,000 equivalent to Portugal, then you're not eliminating your US tax bill to zero. You're still on the hook for 5,000, but you're
Mm-hmm.
not paying double taxes. So it's really actually rare to be double taxed as a US expat and a US citizen because the IRS has set up a lot of expat tax benefits. And that's why it's so important to use a tax software that's focused on US taxes or a tax firm that's focused on US taxes. Because if you go with a tax software or a tax firm or someone that just is not aware of the expat tax benefits, you may get double tax. And there's really no
Yeah.
reason for that. So if you can't use the foreign earned income exclusion, you can always use the foreign tax credit if you're actually paying income taxes where you reside. The only situations where I would say you are double taxed is really, like I said, if you are self employed and you're in a country without a totalization treaty like New Zealand, then you're paying
Mm-hmm.
social security tax. So not income tax, but you're paying social security tax both to New Zealand and to the US.
I
I mean,
see.
is it terrible in the end? I don't really think so because then you have basically two potential pension pots to pull from, New Zealand and the US. So the
Yeah.
benefit will come later. It's just annoying, right? Because obviously you
Yeah.
want to keep your income in that year. It's kind of forcing you to put it into your retirement. And then another one, which is more annoying that you don't necessarily reap benefits from, would be net investment income tax. So if you are
Mm,
a higher earner, right? So, you're making over 150,000 US dollars, about, depending on your filing status, there's different thresholds, but let's just say you're a higher earner, over 150K, and then you have a lot of investment income on top of that. So
mm,
you know, interest income, capital gains income, etc. you could be on the hook for 3.8% of net investment income tax. And this, you cannot use any foreign tax credits against. So this is a social security tax on your investment income. However, it's not clear if this tax will help you later on with social security benefits. We just know it's a social security tax.
Mm,
So those are situations where you may be double taxed, but rarely, it's really rare, right? It's
yeah.
really actually rare to be double taxed. And if, for the average digital nomad, you will not be, right? If you end up paying US taxes, it's probably because you don't pay any local taxes where you are, or you pay a lower amount than the US would charge.
Awesome. Oh, that is so helpful. That clears up a ton, I think, for people. I think a lot of people are worried about that double taxation, being that if they become temporary residents in another country and then they're also getting, taxed in the US, what does that look like? But you broke that down so beautifully. So thank you
Of course. And like
for
I said,
that.
in our platform, you literally just put in your income, and then we have a question: was this income tax anywhere else? You go Portugal, I paid 5,000 euros. You just enter it in euros, and we calculate and say, okay, you can claim this much of foreign tax credit. And you're not, we do the best we can to ensure that you're not double taxed, because there's no reason for it.
Yeah. No, that's amazing. Is there any particular country or countries that you find have the best tax benefits for expats looking to relocate?
So for that's a hard one, right? Because I don't really focus on other countries' taxations. I will say I know that the UK and Canada and Germany tend to be a little bit friendlier in the sense that they will respect some US tax benefits
Mm,
as well. So when
okay.
I say this, it's really just because there's so many Americans in those countries, so that their tax treaties are a lot more bulletproof. Where, for example, if you have a pension from a German employer and you're living in Germany, that basically you don't have to tax your employer's contributions to that pension in the year you get it. So that is a more exclusive tax treaty benefit, I would say. It's only available for 5 different countries. Another one is, of course, if you have like a Roth IRA, that has after tax, it's really beneficial in the US, because you basically put in after tax contributions, and then any earnings are not taxable anymore.
Hmm.
However, if you end up residing in a different country, not every country is going to recognize that US tax benefit.
Yeah.
However, like I said, for the most part, countries with a lot of Americans in them, such as the UK, Germany, and Canada, they may respect that just because it's written in the tax treaty and it's been clarified. So, those countries are more easy, so to say. And
Hmm.
then if you're moving to a country that isn't so popular for US citizens, or there's no tax treaty in place, right? This gets a little bit more difficult. I mean, I think there are actually a lot of US Americans in Brazil, but there's no tax treaty with Brazil. There's no tax
Mm,
treaty with Singapore. So these are situations where it could be more problematic. So, for example, in Singapore, if because there's no tax treaty, you work for a Singapore employee, you pay Singapore taxes. However, your Singapore employee sends you to the US on a business trip for 2 weeks. And so now this daily income you have while you're in the US is now considered US sourced income. And even if
mm,
you pay Singaporean taxes on that, you actually can't claim that foreign tax credit on the portion worked in the US, because there's no tax treaty. You can still
yeah.
claim on the portion worked out of Singapore, but this is, things to consider. I think we're getting a little bit now. It's a little, I don't think the average person has to look into it this much. But of course, if you're trying to think of what countries are easier for US taxes, it would be ones with tax treaties, with totalization treaties, and just knowing that those benefits are more available. But this is more for lifers, I think, because this is,
Yeah.
for pensions and retirements and all of that. For the average digital nomad, it's not too relevant.
Awesome. Oh, that's so good. Yeah, because, every country is so different. And so I always tell people, this will, they'll always ask about tax, well, how will I be taxed? And, it's really an individual situation, because it's about how you earn your income, which country you're in, what their treaties are with the US. Yeah. So I was interested to know if there's any countries in particular. Do you find that you have clients in one country more than the other? Like, is there a country that you see that's become much more popular popular with your clients who are filing?
We have we have clients from all over the globe, right? But of course,
Yeah.
the biggest hubs will, as you probably can imagine, will be Canada, will be the UK, will be
Mhm.
Germany, will be France. There are quite a lot in Singapore too, yeah. But there are some countries that definitely tend to have more Americans in them.
Yeah. Okay. Awesome. So if somebody wanted to use your services, whether they wanted to get a consultation or they wanted to, use you to file, what is kind of the services that you offer and what are the fees that they should expect?
So if you want to work with us, it's really easy. MyExpatTaxes.com. There's only one MyExpatTaxes, so just be aware, right, that, you know, MyExpatTaxes.com. There's only one of us. Don't use any service. I just say this because there is this one service that's always trying to use our name in their ads, which is all is fair, right?
Yeah.
Fair, right? But just saying, so there's only one of us. And basically it's to go on and you have different types of plans that you can use, right? You can use our base plan, which is essentially, you go in and you use the software and you file your own taxes with our, automated tax engine with our tax calculations. You just enter in your information yourself and then you immediately get your tax return to review. So this is always 149 euros. We will start kind of advertising our USD prices soon, but right now we mostly operate in euro just because we're based in Austria. But you can pay in any currency, and we just use
Amazing.
whatever exchange rate. So that's not a problem, but it's 149 euros. And then if you want to enter in the information yourself, but you just want a tax professional like me or anyone on my team to have a look and say, okay, does everything look okay? Can you
Mm.
check my documents, make sure I enter that right? Can you check how much foreign income tax I actually paid in my local country? Because I'm not 100% sure. You can use our reviewed plan, which is then just a little bit more. So it would be then you do your taxes and then you have a tax professional that's now reviewing your return. You can also then use our premium plan. And that is basically that you go in and you really work with a tax professional through the whole thing. You can have, as many, for the most part, as many questions as you have within a reasonable rate, right? Of course. And then you can upload your documents and really have us ensure that this tax filing is bulletproof. Of course, from there, you can have additional services. If you wanted to have a video call with a tax professional, that's possible. If you want to have a planning call, so you don't necessarily want to file the year's taxes, but you want to plan for a future year, that's also available. And it's really, we built our tax platform to support as many expats as possible. So you could be someone that is an English teacher in, any country that maybe you're not necessarily earning a lot of income. You can go and use our base plan and it's easy and you can file your FBAR as well with it and any other documents are related to your tax return. You could also be someone that has an incorporated company in the UK, a lot more assets, you have foreign investments, just a lot more of a complicated tax profile, you can still use us. And so we kind of have something for everyone. And with that being said, I kind of touched upon it, but of course, with your US tax filing, why it's really important to use a tax service for expats is because you have the tax filing, you also have the FBAR, right? This
Mhm.
whole report about your foreign financial accounts. And then on top of that, if you pass a certain threshold, you also have to file this FATCA form, which is form 8938 included in your tax return. So there's a lot of like little bits and pieces that
Mm.
create this whole package of a tax return. And if you use a service that's not 100% for expats, a lot of things can get missed. And it's really risky to miss these because, like, if you miss an FBAR filing, that could be a $10,000 violation. If you miss a foreign corporate reporting, that could be a $10,000 violation. Like, I'm not kidding you. The IRS is so crazy about their penalties. It's reasonable, but it is what it is. And so we try our
Yeah.
best to protect, our taxpayers and our clients.
Amazing. That is so wonderful. Also, too, if someone just wanted to, most of our members are, aspiring to live abroad, becoming expats, becoming digital nomads. If they wanted to just sit down and do a consultation with someone at your company, just to get an idea of what they should expect, if they've got a plan in mind of where they want to be, how long they might want to be there, could they sit down and just have like a strategy call so they are aware of kind of, planning out their calendar year of, when they should be back in the US versus, being abroad, things like that?
It's our planning service. We have a planning service.
Okay.
And then we're going to add a lot more features to this planning service. So basically, that you can go in, you will have access to basically kind of like forecast your tax situation. So you can already start preparing your next year's tax return to kind of see,
Mhm.
okay, if I do this, how does that impact things? You can also then have a way to, have emailed questions, or you could have a video call. So there's different layers of it. And we already have the planning service now. So if you use it, it's essentially working with a tax professional through email and video call. And then as I see people really want this service, I am looking to add, like I said, more features so that it's even easier to use, right? So that you can just put in what are your travel dates and then what's your expected income, and then see this is what my tax return might actually look like for the next year.
Amazing. Thank you so much, Natalie. I think you've eased a lot of fears today around
I hope
taxes.
so. I hope so. It's If there's one thing I would hope everyone can let it sink in is I understand it's daunting. You have to file this US tax return, and perhaps you have to file a local one too. And that's a lot of paperwork. But remember, as a US citizen, you have the access to the US market. You have access to US employment opportunities. You have access to the US investment markets. And that is something that you can definitely take to your advantage and use that through your US tax return. It's really a vehicle to say, how can I also do some type of financial planning, right? How can I
Hmm.
also make sure that, I'm paying, if I want to keep contributing to my social security benefits, that I do so. If I want to contribute to my individual retirement account, which I didn't talk about too much, so I just do a quick note there.
Yeah.
If you want to contribute to your US individual retirement accounts, there's some things you have to be aware of, especially if you use the foreign income exclusion. And that's something we can help you out as well, is to figure out how much can you really contribute if you're excluding all your income. Or if you work with a tax professional, we can even figure out, okay, we only exclude a certain amount with the foreign income exclusion, and we allow some amount to be taxed so that you can still contribute. But I digress. Basically, is think of your US tax return as a way for your own financial plan, right? And that is
Mm-hmm.
essentially what it is. It's a summary of your income, summary of your deductions. And then with that, it kind of lets you figure out, how can I further then invest my income if I want to do so? So,
Hmm.
don't think of it too much as this daunting task. And I hope with my expert taxes, it won't be anyways, right? It should be a lot easier. And then also kind of use it as a tool in your, in your financial planning.
Yeah. Oh, amazing. Thank you so much, Natalie. I'll be able to link all of your information in the description of the webinar. So if people want to work with you, they'll have direct access to set up some time doing consultation or to use the filing service as well. Now that tax return season is on its way.
Yeah.
So I'll put that all in the description below. And of course, if anybody has any questions, I'll also make sure to link your contact information for my expat taxes.
Like, thank you so much for having me.